On board Gurmeet Chadha, he's joining us to talk to us about the fundamentals, what's looking good, which sectors are seeing the maximum amount of traction, and where is he that he's putting his money. Gurmeet, that's exactly the first question when it comes to the entire defense and manufacturing space. Which are the stocks that you own, you have on your radar? What do you like at this point?
Defense looks a touch expensive now after the sharp run-up we have seen, even in the PSU space, including HAL and the likes of others. Uh, I think also so. I think some of the good news is in the price also. There are a lot. It's these orders and projects are very of long gestation with different milestone payments. So you have to be a little careful of So I think the opportunity now lies in import substitution as the indigenization continues to gain force. Defense Ministry continues to ban a lot of items which are imported. So probably we have to go level 2, level 3, and see which are the Indian private companies which become part of the overall supply chain. Manufacturing, we continue to think that we are in a housing-led investment cycle. We saw that in the GDP print which came, capital formation was 8.9%. So we continue to play it through something like Polycab, which is cables and wires players. Some of the energy names, some of the EPC names like L&T. Uh, Manufacturing again would also include the EMS opportunity, which is electronic manufacturing services. We have a good IPO also, which is around, and we've seen how Dixon has moved from the lows. So that's another space which we like in manufacturing.
Some of these defense names, but separately, the one space which is quite active in the trading session is FMCG, right? What's your take, Gurmeet, as far as this pack goes? Britannia was fairly quiet for a long time. Today, it's perked up by 4%. Similarly, Nestle wasn't doing much. It's quite, it's seeing quite a bit of traction today. What are your top bets when it comes to the FMCG space, if at all?
Pretty constructive, Anisha. Reason being that I think if you see the MSP hikes done today, it's the highest ever in the last few years. Almost in that 8-10% kind of a hike in minimum support prices, which is across, let's say, paddy, groundnut, a lot of pulses, including moong, etc. We saw that and was expected after the Karnataka results. Also, we have important state elections this year in the run up to 2024, and rural economy has been showing some softness. So I think you will see more government initiatives to revive rural economy. Also, the raw material prices have softened. If you see HUL, for example, despite a tough last year, they still had 4 or 5% volume growth. So if they can come back to volume growth, they are gaining market share in almost 75-80% of the categories they operate in, and huge distribution reach. So I think that's something which, in my views, should benefit as the premiumization plays out, and we see good rural recovery. I also think players like Tata Consumer will continue to do well. It's a food and beverage company largely. Continues to expand. Last 3 years, the distribution reach has gone up from almost 0.5 million outlets to 1.5 million outlets. HUL, by the way, is 10 million outlets. So long runway as far as and distribution is quite underrated. Even ITC, assuming we don't have any negative surprises on cigarette duties, I think that's more reasonable stock, very good dividend deal. Probably would stabilize after the shock that we've seen. So pretty constructive on this space with margins coming back and some volume growth also coming.
The entire healthcare space, that's seen quite a bit of re-rating already, but despite the run-up as well, Gurmeet, would you be a buyer in the hospital names? Today you have Max Healthcare, which is seeing quite a bit of inflow. The other ones as well, apart from Fortis, have been doing quite well.
Yeah, I think valuations have become rich, be mindful of in the near term gains, but overall looks to be a solid space. We like Apollo, completely integrated play both on hospitals, pharmacy, the digital health ecosystem they are building. Occupancy rates have been picking up. Average revenue per occupied bed seems to be doing well. So all the contingents there, but post Nifty inclusion, the stock has done up. There's also a niche play which we call as a consumer healthcare, which is Rainbow, which is more child pediatric care, which is something which I think will pick up more. One of the niche plays in that space. That's also we like. Uh, and we like broadly in healthcare. I think the sector is quite underrepresented. It's still 3.5% of Nifty. If you look at any developed market, it's a very healthy double digit. US is almost 16-17% healthcare weightage. So I think at some, you will see more and more representation and more and more, weight creation happening. So in our portfolios, we are slightly overweight pharma in general.
Okay, a bit overweight when it comes to the pharma space.
Gurmeet, just that renewed vigor once again around the Tata Group, right? We just heard of that big defense deal. Then, of course, the commentary coming in from Tata Motors Analyst Day as well has been very strong. We've already seen how Tata Motors, after some underperformance all through last year, is now sitting at a 52-week high. Where within the Tata conglomerate would you, be willing to fresh accumulate or fresh buy?
See how things change. There was a time TCS used to do the heavy lifting. And right now, for last year or so, it's TCS is the laggard, if I can use that word, not really in literal sense, right? I think great turnaround in most group companies. Tata Motors in particular, very very impressed. This year also, despite the global turmoil, chip shortage, we are targeting 400,000 wholesales for JLR. Uh, Very very good debt reduction. They're talking of $2 billion of free cash flow, which is music to ears. Continues to do well on the passenger vehicle front, which is currently small, but I think the clear leadership on EV. The SUV portfolio also doing well. Commercial vehicle portfolio is slightly soft, but I think will pick up as the investment cycle plays out. So that's something I think it's done very well from I remember it was a two-digit Tata Motors during COVID levels. So that's something we continue to track. But I discussed Tata Consumer earlier in the show. That's another one we like. Tata Chemical also I think is the most undervalued. If I were to call agrochemical chemical place, so 80% of the numbers are still soda ash and basic chemistry. Soda ash is the key ingredient for glass, which has end users in infra and housing. I think that should pick up. It also has an agrochemical play through Relish. And now with the EV tie-ups they are doing, there will be some green chemical and new age chemical play there as well. 12, 13 times earnings, very, very reasonable valuations in fact. So those are the some things we track and the new IPO which hopefully should hit the market soon, which is Tata Technology.
Technologies, that's one IPO that everybody has been waiting for. But
in the market right now, many question whether metals would actually join into the rally or not, or for that matter, many or rather most are actually averse from globally linked sectors. What is your take here?
I think technology. If you have the stomach to probably withstand 2 quarters of volatility, I think especially companies which are doing digital transformation, you'll also see a lot of cost optimization deals. Typically happens when slowdowns happen. There will be vendor consolidation, and I don't think so. The use of tech eventually is going to come down in the medium to long run. Also, I think the concerns on generative AI, in my view, are overblown. So one is the technology part of it. Second is the business application part of it. So recently, for example, TCS is putting 40,000 people with Google on their AI platform because it's a self-learning platform. So a lot of data also needs to be fed. So I think Indian IT services have been relevant. They have been relevant since dot-com bubble or Y2K issues that we were doing our MBAs. I think they'll be relevant going forward as well. But near-term headwinds persist. There are deal cancellations. There is slowdown in deal making. So if you can withstand that, over the next 2 quarters, I think the rest of what will be very good.
Gurmeet, I wanted to talk to you about Bajaj Finance because I think that's one stock that you track very closely. And my colleague Ajay broke a story this morning talking about how there could be a change of guard. Rajiv Jain could be on his way out, maybe elevated at a group level, and there would be a leadership change happening there. Given the fact that you've been watching it closely, is this something to be worried about?
A strong leader getting elevated would always create some near-term, succession issues. We've seen that with HDFC Bank with Aditya Puri's exit, and Rajiv Jain has obviously created a world-class NBFC. I think the key issue for Bajaj is whether they can continue to grow 25-30% on a base which is not 2.5 lakh crores. And now with the regulatory arbitrage not being as much between banks and NBFCs, I think that to me is a key question. And that's why yesterday, in fact, I tweeted about that Maruti tie-up. where they are talking of customized loan tenures. I think so. Players like Bajaj will continue to innovate. Right now, loans are generally sold as standard products. We not really customize it the way we customize investment solutions. And I think that's where probably some of the smart digital guys will make a change. And I think Bajaj is from the front. So I think valuations are rich even at 7,000. So the key concern to me is, can they grow at that 25-30% to sustain 7-8 book multiple?
Okay, Gurmeet, always good chatting with you. By the way, I really like that hashtag Har Har Nifty. Quite apt, right?
Thank you. Thank you so much.
Okay, good speaking with you as always.